so I want to show you how Alan Greenspan is secretly trying to tell us how good of an investment gold and silver and precious metals are. And it's funny because he was the former chair of the Federal Reserve from 1987 to 2006, who is probably the biggest proponent for not liking precious metals. Because if precious metals are backing a currency, which they currently are not anywhere in the world, that means that they can't print money as they are now. And again, there's nothing back in the currency. They can just print away because there's nothing backing it. And that's why the Federal Reserve does not like the gold standard. So pretty interesting that what you're about to hear is coming from Alan Greenspan, who headed the Federal Reserve for 19 years. Now, I believe that Alan Greenspan he's a good man that kind of got he got persuaded by wealth and power. And I think he still is a good man who sometimes wants people to know certain things, but then pulls back because of his past and his history with the Federal Reserve. And he's almost someone that's like in a struggle with himself. And I want to show you that throughout this video. So let's start with a quote that he said before he was chairman at the Federal Reserve. And this was in 1966. So very, very interesting. In the absence of the gold standard, there is no way to protect savings from confiscation through inflation. What he's saying is that without the gold standard, without anything backing a currency, you're going to have massive inflation because of printing money. The more money you put into the economy, the higher inflation is going to go. There's no safe store of value. If there were, the government would have to make its holdings illegal, as was done in the case of gold. So he's talking about when it was illegal to own gold from 1933 to 1974 without a special license in the United States. If everyone decided, for example, to convert all his bank deposits to silver or copper or any other good, and therefore decline to accept checks as payments for goods, bank deposits would lose their purchasing power and government-created bank credit would be worthless as a claim on goods. Very interesting. The financial policy of the welfare state requires that there be no way for the owners of wealth to protect themselves. This is the shabby secret of the welfare status tirades against gold. Now, this is really interesting. Deficit spending is simply a scheme for the confiscation of wealth. Now, this is a very true statement from someone who ended up doing that over and over again as chairman of the Fed. What he's saying is that basically money printing, which happens when you have nothing backing the dollar, as we currently do, we're currently 100% fiat currency with no gold standard or anything like that. He's saying that that's a scheme for confiscation of wealth, or as some people would say, hidden inflation. And this is the main way that our government currently taxes us, is through inflation, but it's hidden and most people don't understand it. He also says that gold stands in the way of this insidious process. So again, he's saying gold prevents this, and that's why a gold standard is good. It stands as a protector of property rights. If one grasps this, one has no difficulty in understanding the statist antagonism toward the gold standard. Wow, that came from Alan Greenspan, who was head of the Federal Reserve for 19 years, who is the biggest money printer in the world and is the biggest reason for the mess that's going on right now in the economy. So that's very interesting. Now, I want to take you to an interview with Alan Greenspan, okay? Now, this first part of the interview is 5 minutes long. I'm just going to break it down a little bit. And this was posted on the Council of Foreign Relations, and he was being interviewed by this lady, Jillian Tett. So let's go into this. I'm going to kind of break it down as we go along. Very, very interesting stuff. Now, this was after he was the chair of the Federal Reserve, and he gave his reign to Ben Bernanke. So let's go ahead and play this.
Before, I'm going to turn to the audience for questions in 1 minute. Before I do, though, I just want to ask, though, one of the really interesting chapters in your book is about gold. And there's been a lot of media debate in the past about your views on gold. You yourself have posed the question as to why would anyone want to buy this barbarous relic? I don't know whether John Paulson is in the audience, but it's an interesting question. But do you think that gold is currently a good investment given what you're saying about the potential for turmoil?
Yes.
Do you put...
Yeah.
So he says yes, right? And then he kind of pauses and he's like, so do I really want to talk about this? Because again, for the last 19 years that he was head of the Fed, they go against that, right? So let's keep playing this.
I mean, economists are usually perfect in equivocating. In this case, I didn't equivocate.
So what he's saying there is basically, look, I didn't go off topic. I didn't try to beat around the bush. I told you, yes, it's a good investment, but he didn't go into details why. So let's keep playing.
Look, remember what we're looking at. Gold is a currency. It is still, by all evidences, the premier currency where no fiat currency, including the dollar, can match it.
You hear that? No fiat currency, including the dollar, can match it. Out of the mouth of someone that was head of the Fed for 19 years. That's crazy. Let's keep playing.
And so that the issue is, if you're looking at a question of turmoil, you will find, as we always have in the past, it moves into the gold price.
Mm-hmm.
But the gold price is actually sort of half a commodity price. So when the economy is weakening, it goes down like copper. But it's also got a monetary characteristic which is intrinsic. It's not inbred into human beings. I cannot conceive of any mechanism by which you could say that, but it behaves as though it is. Intrinsic currencies like gold and silver, for example, are acceptable without a third-party guarantee. And I mean, for example, at the end of World War II, or just at the end of it, Germany could not import goods without payment in gold. The person who shipped the goods in would accept the gold and didn't care if there's any credit standard associated with it. That is a very rare phenomenon. It's the reason why, for example, in a renewal of an agreement that the central banks have made, European central banks, I believe, about allocating their gold sales, which occurred when gold prices were falling down, that has been renewed this year with a statement that gold serves a very important place in monetary reserves. And the question is, why do...
Now, this next part's really important, but I think also part of this is him a little bit beating around the bush, right? Like he's trying to throw in some stuff that maybe people won't understand. I think part of this, again, is him trying to protect himself. What I see in this man is someone who's extremely smart, who wants to help people, but at the same time, he's torn because he did not help people for a very long time with what he did at the Fed. So let's keep going.
Central banks put money into an asset which has no rate of return, but cost of storage and insurance and everything else like that. Why are they doing that?
Good question.
If you look at the data, with a very few exceptions, all of the developed countries have gold reserves. Why?
Another great question. Why do all the major countries still have gold reserves? Why?
I imagine right now it's because of a question mark hanging over the value of fiat currency or the credibility going forward.
Well, that's what I'm getting at. Every time you get some really serious question, the 50% of the gold price determination.
Now, notice how she brought up, like, how fiat currency, like the question of fiat currency, this is where you really start to hear Alan, I believe, start to really kind of do circles and try to throw in big words and run around things. We're going to go into this for another minute and a half, and I'll show you one more short quote, and then we'll finish up, but this is pretty interesting.
Begins to move.
Right.
And I think...
So, watch what he does here. Now, this is somewhere where I think he's trying to redirect, right? Like, he wants to answer the question, so he does it in a way where he almost recommends someone else's content that talks about the subject, so it doesn't have to be coming from him. So watch this.
It's fascinating. And, I don't know, is Ben Steele in the audience?
Yes.
There he is, okay. Before you read my book, go read Ben's book.
How interesting is that, right? So before you read my book, go read his book. That way he can say it. It doesn't have to come from me. He can say it.
The reason is you'll find it fascinating on exactly this issue, because here you had the ultimate test at the Mount Washington Hotel in 1944.
By the way, 1944 is when Bretton Woods was started, right? The Bretton Woods system, where gold was set at a price of $35 an ounce, and then it was backed by the dollar, and it was basically like a worldwide thing. That, of course, lasted until 71, but that's kind of the importance of that date there.
Of the real intellectual debate between the those who wanted an international fiat currency, which was embodied...
Notice how he's very, he's very careful in what he says.
In John Maynard Keynes' construct of a bancor, and he was there in 1944, holding forth with all of his prestige, but couldn't counter the fact that the United States dollar was convertible into gold, and that was the major draw. Everyone wanted America's gold. And I think that Ben really described that in extraordinarily useful terms as far as I can see. Anyway, thank you.
Right. Well, I'm sure with comments like that, that will be turning you into a rock star amongst the gold bug community. In fact, you'll probably be trending on Twitter today.
All right, so that's the end of the first one there. And again, that was after he was the Fed chairman. Now, this is the same interview, but this is where they go to questions. And I just want to kind of go in just a minute of this guy's question. Now, the guy who asked the question, a little bit of a robotic voice, so just get through his question, and we want to pay more attention to Alan's response here.
So is there a complacency on the part of investors that has developed
I feel like this guy's smoked like 4 packs of cigarettes a day for the last 30 years.
at any time that the market shakes, because it's all they can do, that the Fed is going to come to its rescue? And then interrelated to that, and going back to your gold question, is it then that an elected government will always choose inflation over austerity because you're going to lose your job if you do austerity? That is causing some of the confidence in gold, because it's the only way out of this is to inflate our way out of it.
Right.
That's what history tells us.
Do you see what he just said? That's what history tells us, and he's 100% right. Right? So as history tells us, we try to inflate our way out of our problems once we have a fiat currency. You know what's happened throughout history? It's never worked. There's never been a fiat currency that has succeeded. They have always failed. And that's where we are right now. We're at a point where we're in so much debt and increasing at an exponential level where it's going to break. And he just said that. He said that's what history tells us.
But remember, there's a deeper question here. You're making that statement, for example, in, let's say, 1880 or 1890. I'm trying to trace where we are. Those statements never arose back in that period because the big debate was between whether you had gold or silver. But the fact the fiat currency expansion got very tarnished with, in 1775, we printed a whole bushel full of continentals.
So now what he goes into here is basically how, a point in history where it was the Continental War he's talking about in 75, where they just printed all this money, printed, and they got some serious trouble, and that's what he ends up going into. And then it kind of goes off topic. So I want to stop it there, but what I want to do is kind of just go back to some charts, right? The position we're in right now, if we look at our debt and we go back to history, like some of the dates he was talking about. So here's our debt level for the United States all the way going back to 1790, okay? You see we had virtually no debt up until about this point right here, okay? Virtually no debt, right? We started to get a little bit of debt starting right here. Notice the importance of that year, 1944, and that was when Bretton Woods system was started, right? So we gained a little bit of debt there, but the main debt really started in 71. Now, 71 was when we were taken off the gold standard, right? The Bretton Woods system was totally ended, and look what's happened since then. Okay, this is really bad. Okay, we've accumulated more debt in the last 3.5 years than we did in the first 215 years of our whole history. That is unbelievable. Okay, so we have 31 trillion in debt in 2022. We got half of that debt in the last 10, 11 years, right? So the rate that we are getting debt right now is extremely alarming. And we can also take a look at the M2 supply and the debt level, and we can see our debt is increasing at an exponential rate while our money supply is increasing a lot slower. So the floor level between our debt and our money supply is getting further and further. That means, we already can't pay off the debt. We're getting even further away from it. And at some point, this is all going to crash. Okay. But the main thing I want to show you is that, Alan Greenspan, he's an extremely smart man, right? I think he's genius level as far as his knowledge. And again, I think this is someone who tasted wealth and tasted power, and I think he's a good person, but he also struggles with the fact of, what can I say and what can I not? And I think it shows throughout some of these, if you watch even more interviews, it shows throughout that. So if you're someone who's interested in investing in gold, I recommend going to investingingold.com/quiz, and we'll hook you up with a company that is well established. I've been in this, in this industry for over 15 years now. I know many of the CEOs of the companies out there, and depending on your financial situation, we'll help connect you with the best precious metals company to help you with whatever you need, or at least get more information, right? Take the quiz, sign up with them, get one of their free kits, and just learn more about it before you make an investment. And that's the path I recommend you take. So that's going to conclude this video here on Alan Greenspan, who is a very interesting character, still kicking here at 97 years old too. Awesome job on that, Alan. maybe he has some insider secrets from the people who run this world. Who knows? But hope you guys enjoyed this video, and I'll catch you in the next one.